Hey everyone, this is Dmitry Pargamonic with MarketChameleon.com. In this video, I'm going to show an example how to find a bullish call spread with a downside cushion. And we're going to use the bullish call spread screener. Really quickly, let me show you an example of what I mean, and then we're going to do a screen. So here, Apple, the first line here below, we see the last price was $131.73. And if we come over here, we see that this first line shows us a 115, 120 call spread. And this means that the stock at 131.73 is already above both calls, and this bull call spread is in the money. Now, if the stock closes here at expiration or goes higher, then you're going to realize your max gain for that bull call spread. And here we see that right now, the price is $4.50. At expiration, it would be worth $5 as long as the stock is above 120. And if the stock's 131.73, you could see here that we could still decline from here, from 131.73, and as long as it's 120 or above, you'll realize your total max gain from $4.50 to $5. So this gives us here a 9.3% downside cushion until we hit break even. So that's 9.3% downside cushion from the current stock price to our break even point. And let's do a screen and look for ones that have a good downside cushion and a good return if the stock is flat or goes higher. Okay, so here we still want to make a decent return on this call spread, and we want a downside cushion in case we're wrong, that maybe the market turns, and we want a little bit of extra safety in case the market goes the opposite direction that we think. So first, let's do this. I'm going to expand this search to look for expirations that expire in the next 30 days. And then what it will do is, when we select that filter, is bring us back all the different bull call spreads in the market is with expirations that expire before 30 days. And then I want to also take a decent return if the stock is flat. So let's do this. If the stock is flat or goes higher, we want at least a 20% return in the next 30 days. Okay, which is a pretty good return in a month for any type of really risky bet. So now we have at least a 20% return right over here. And let's say we want a decent cushion to break even. So let's give ourselves a 5% cushion in the stock price before it hits our break even, at least a 5%. And I'm going to use this filter here, cushion to break even. Let's select at least 5%. And now, using all the filters that I have selected, it will bring us back the different available call spreads that meet that criteria. And here we see Apple here on January 20th, the 121, 126 call spread cost $4.10. We have a 5.4% cushion from 132.29 down to our break even of 121 plus 410, 5.4% cushion, and a 22% return as long as the stock's above 126. And we do have a bunch of them. Here's some in Apple and Google. We have a bunch of them that meet that criteria. To narrow down this list even further, I'm going to use this filter here, show best only, and we want to see the call spreads that have the most cushion and meet the other criteria, because we already put this return at flat at least 20% or higher. So as long as we get that, let's see what this scan will return if we want to see the biggest downside cushion by stock. And I'm going to use this best downside cushion by symbol. I'm going to select that. It's going to go do all that scanning for us and bring us back the best candidates. Up here, we have Apple, a 5.4% cushion with a 22% return. Google, we have a 5.8% cushion with a 20% return. Amazon, 5.8% cushion with a 26.6% return. Tesla, even a bigger cushion, almost 13% cushion with a 23.5% return if the stock is flat. And you could see how quickly we did that, and it brought us back all the possibilities meeting that criteria. Very quick, very simple. Hope you guys liked this video, and hope to see you guys in the next video. Bye, everyone.